Hey guys, welcome. Just going to give everybody a moment to join, and then we'll jump straight in. Today we're doing a strategy development session, which if you haven't been to one of these before, we basically go through all of the metrics that you get on the Darwinex Zero platform. We take a look at. I usually get somebody from the audience to give us their track record, so that at least somebody takes something that, tangible away from the session that they can go and research, investigate, or even implement. But we're basically looking at different variables that you might not look to on a day-to-day basis when trying to refine a trading strategy. So I've just sent the link in the Discord. I'm going to give everybody a minute or so to join, and then we'll get started. I'm also, if you came to yesterday's session, you'll know I'm just coming over a bad throat at the moment. So I am trying to get as much water in me as possible. So I apologize if I'm constantly picking up my bottle today because, I need to. You're a superstar. Thank you for letting me know that. Strategy development. That was me rushing. I have a 30-second window after clicking go live because I don't stream on Discord anymore, just because of A, audio issues, and B, segmenting the audience feels kind of weird because the guys on Discord can see my screen, but they can't see me. So it's much more simple. But because I now just send the link to Discord, I have a 30-second window from pressing go live to load up on YouTube. It takes a couple of seconds to get the link to send it in Discord. So I'm kind of in I'm in a bit of rush mode when that first happens. Jay said, how we doing? Hope you're having a good day, man. That sounds like you're Australian. Are you? I mean, g'day. Sounds Australian, but not sure. I'm not sure if you'd be awake at this time if you was in Australia. Okay, cool. Seems like the numbers are coming in, so we'll get started. So welcome, guys. Correct. Oh, you are in Australia. Is it? I mean, is it not like midnight for you? Let's have a look. Time in Australia. 1 a.m. Dude, I mean, that's dedication, right? Because 1 a.m. I was going to say you're a night person. You've been on every session for the past 2 weeks. So I kind of feel honored that you're taking the time out, that early in the morning to or that late at night to come and spend some time with us. But anyway, guys, welcome to today's session. It's all about strategy development. My background, I've been a trader for 7 years. For about 6.5 of those, I was a discretionary trader. So I built systems. I learned from some great mentors. In the past 6 months, I've pretty much swapped everything over to an algorithmic approach where I build portfolios. So I'm finding small edges to exploit, that are present during every single market cycle, or at least present during every year, let's say. Building portfolios and transitioning away from discretionary trading completely. Just a personal preference because of things in my life, family, work, all that sort of good stuff. Before that, I was a data analyst. So diving into different variables, taking a look at statistics is kind of what I've been used to inside and outside of trading, right? I love this kind of stuff. It's probably, I think it becomes a little bit harder when you're dealing with automated portfolios, because everything is to do with statistics and certain parameters. So when you're building a strategy, this is kind of what you're doing. Whereas as a discretionary trader, at least in this day and age, I feel like the majority of traders will learn a chart pattern or learn some form of technique to apply to a chart. And that's what they will trade day in, day out. And they will sort of go in this loop where they don't actually know the long or how to phrase it. They don't know the longevity of their system because they are so focused on one variable, which is the technical analysis. And whilst that's not necessarily a bad thing, there is 1,000,001 different variables that will affect your performance, that will affect the markets. Even things that like macro elements like interest rates, whatever it may be. There's just 1,000,001 different things. And this is about trying to find low-hanging fruits that you can go and take and improve your trading strategy outside of the standard, this chart does this and that chart does that. JC says, I understand how lonely trading is, so just happy to be a part of a community now. Thanks for the content. I appreciate that. And yeah, the trading is a lonely thing to do. Although I think over the past few years, it's become more of a community aspect in general. Like I don't think it's as lonely as it once was, right? With the rise of social media, the rise of different communities, even the rise of prop firms, Darwinex, companies like this brings a lot of people together, right? But I still think the actual process of, especially as a discretionary trader, sitting behind your screens, making those decisions, taking the win, taking the loss, whatever it may be, that is where the loneliness creeps in. It's like, for example, if you have a job, you can go to your boss and you can say, I've just made this report. Will you check over it? Will you, check it off and make sure it's exactly what the company wants before I submit it? Yada, yada, yada. Again, could be anything. In trading, you have to do everything yourself. You have to make the decision. You have to stand by the decision. You have to let that decision play out. And that can be a real struggle. I actually think that's where the majority of traders fall short. I think most traders can build a technical edge or at least an edge that's half decent and might make money consistently or semi-consistently. But the real place that they struggle is being able to make decisions, not get decision fatigue, not let their emotions creep in and overrule what they know is the right thing to do. I mean, even me, when I first started, this is my main portfolio, XAQP. For the guys who come to these sessions a lot, you'll have seen this before. When I first, you'll notice that the equity curve is probably a bit smoother here than it was at the beginning. At the beginning, I was learning how to let go of my trades, right? Because like I said, I'd come from that discretionary aspect of making all of the decisions and standing by it, to then give up that and relinquish that control and let the strategies do the work for me. That was a really difficult thing for me to do. And so there was a lot of manual intervention that I was doing. If a trade looked exhausted, I'd close it. Or if a trade looked, there was one time I remember I was about to go to sleep and I checked my MetaTrader and I could see that there was a pending order to long NASDAQ into all-time highs. Like, we were already trading at all-time highs. There was a pending order, a few points above current price. And this was before I went to bed, the super tight stop loss. And I was thinking, I don't want to wake up to a stop on that, so I'm going to pull the order because it's going to trigger and then it will just cake it through the night. We're at all-time highs. Don't want to buy here. I woke up in the morning and it just absolutely had blasted. And me intervening in that had cost me quite significantly because it was a great trade. So over time, I've had to try and relinquish control. FX Physics, welcome to the session, dude. It's a pleasure to have you here on the verge of gold. Yeah, I mean, I need another 4%. I don't think my max drawdown will creep higher than 4.3, at least not in the short term anyway. At master level, I mean, by the way, if anyone's here and they want me to take a look at their Darwin, that is the purpose of this session. But I also sometimes just use it just to have a chat, talk about markets, talk about the metrics, and we can go into details, in a little bit later into the session. But the master drawdown, or the drawdown, sorry, on my master account is 1.9% over an 8-year period. This is scaled up by 3.4x, I believe. Let me log in so we can actually see it. I know it is Darwinex.com. I believe it's 3.4x. Yeah, 3.41. So if we take a look at this, 3.41x. So, I mean, what even is that? The max drawdown that I've had, I think it's 0.91. My flex work. Let's take a look at this. It's sign me out. Great. Okay, so this is a master record. It was updated 6 hours ago. It's closed two profitable positions since then. Now in a couple of positions in slight drawdown. As you can see over here, EuroCAD looks like it's about to hit stop, although it's moved away. Dollar Yen took 2 winners earlier, and these two have just reversed recently, which is unfortunate, but it is what it is. Yeah, so you can see my max drawdown. This is since the end of April / beginning of May has been 0.95%. So again, that translates to 4.33% risk adjusted. So I am being scaled up quite heavily by the risk engine. I don't think it will go much higher than that, really. My equity curve has stabilized over the past couple of months, as I was talking about, just being able to relinquish control and just kind of letting the strategies play out and do their thing. So the curve is kind of getting a little bit smoother, and I've added a few more strategies in too, to try and get that curve as stable as possible. I don't really care about the return at this point. It's mainly about controlling the risk, and whilst I'm adding strategies, I'm removing exposure from some of the others. So when I had 10 strategies, they might have all been running with X amount of exposure. As I get to 15, I slightly reduce the exposure on the original 10 to allow for those new strategies to come in. But yeah, back to what FX Physics said. I need 4%. Max drawdown will likely stay where it is, maybe 5-6%. As long as I don't hit 8.3, then 20% return will be good enough. But the record is, or will be, just over 5 months long at the end of this month. Oh no, sorry, just over 4 months long going into September. So yeah, exciting times. I just need to make sure that we continue performing throughout the rest of this year. I can see a couple of comments. Let me go through them. PXX Lou said, I have a 90% mechanical system that I have to execute manually. Good balance for me now. Yeah, there's not too much difference between a mechanical system and fully automating it, I don't think, especially if the theory behind the strategy is kind of mechanical. The difference is being able to execute. Not everybody is always sat behind their screens, I guess. Or if there's setups occur overnight, there's different variables, right? And there's different benefits for having certain execution methods, whether you do fully automate it or whether you do still execute manually. Gabs Trade says, is it possible to come out of calibration phase with an allocation, or do you have to have more trading days? Thanks, FX Physics. Yes, it is absolutely possible. So you can see I started at the end of April. I didn't come out of calibration phase on this account until the 24th of May earlier this year. And then you can see I got my allocation of 40,000 at the end of May, start of June. So it was a week after I came out of calibration phase. That I did have like a 10% month in May, however, so that's probably why. It was a really good month, but it is absolutely possible. I then have I also have another Darwin, which isn't as long, and this is kind of a test Darwin for me. I just play around with this. I have a couple of I have a system that carry trades. I have a system that grid trades. I have my breakout and mean reversion trade systems as well that I built for XAQP. So this is kind of my playground, right? You can see it's 3 months old, but I haven't had any allocation yet, okay, because of the performance. So it's all dependent on your performance. That's it. Exactly, FX Physics. You have to score above 75 and then you're guaranteed an allocation. Appreciate that, JCid. It's, yeah, XAQP, I mean, I think I started it at the perfect time. I've actually removed the system from the portfolio that did the majority of that 10% return. I had a breakout strategy on gold, and whilst it performed really well in May, like I can't fault it at all, it was one of the weakest systems that I had in the portfolio, statistically speaking and historically speaking. So I ended up pulling that from the portfolio because I kind of thought I've got lucky with it. I'm going to monitor it over the coming months. And maybe I'll add it in again at some point. But it felt a bit like I was being lucky when I was comparing it to my other strategies, and I was saying everything points to this strategy is going to be the one that blows up at some point, or the one that underperforms. And right now it's not doing what it should be doing. So I actually pulled that from the strategy. But yeah, that gave me a real strong start. Just got to, maintain that going forward. I did hit a high of 17.5%, which was great last week. But since then, I've, taken a couple of losers. So is what it is. Just got to keep your eyes on the goal. And also, I think, I don't see much volatility. So I have my chart open on one of my screens all day, every day. So I see the open P&L. I see the trades that it's taking. And like I say, when we're looking at the MyFX book, I mean, this is what a 4-month track record. Yeah, so I ignore April because there was only a couple of trades. So it's a 4-month track record, super low volatility. I mean, you can see how low volatile the equity curve is, I guess. I mean, that looks like quite a dramatic drop, but it's 1%. So I don't really notice how volatile it is. I then go on my Darwinex where it's scaled up 3.5%, and I'm like, oh snap, I'm down 1% already today. So that can be a bit of a bit of a reality checker. But I kind of like the fact that it's scaled up. I think if it wasn't scaled up, of course, I wouldn't be able to compete with everybody else because I do run it at such low risk. SD said, I don't see the link. How can I increase my risk multiplier? It says 0.41, my Darwinex 0. Not sure what you mean about the link, but in terms of increasing your risk multiplier, it's all based on your value at risk. So if we jump over to strategy analysis and scroll to the bottom, we have your VAR, or your value at risk here, which essentially measures your exposure, or how much exposure you take in the market to generate a return. It's a mathematical calculation which accounts for asset volatility, the frequency of trades that you take, how long you trade them for, and your position sizing. Now, if you do want to increase your risk multiplier, you would have to decrease your value at risk. There's two ways you can do that. There's the strategy specific way, which I never ever recommend because it would mean you trade in less volatile assets, holding trades for less time, and also taking less trades. It doesn't make sense to change any of that just to satisfy increasing your risk multiplier. The only thing you could do is bring your position sizing down. That would therefore decrease your value at risk, and inversely correlated with that is your risk multiplier, so your risk multiplier would increase. However, having said that, your Darwin will always come out the same return anyway, so it doesn't make sense for you to do that. You can end up get caught chasing your tail, trying to bring your value at risk down to increase your risk multiplier, but then your Darwin still does the same thing, because the Darwin will adapt and it will adjust to the new behavior. So if you're dropping your position size in, yes, the risk multiplier might increase, but if you're making less, then even though the risk multiplier is increased, your Darwin will still come to the same result. I don't know if I've explained that as well as I can. I used a lot of words there and feel like not a lot came across, so I apologize. But let me know if I haven't answered it, and I'll go back over that again. Fulfillment, welcome. Hello, Kieran. On capacity factor, does it matter if the trader uses index or ETF, for example, NASDAQ 100 CFD versus QQQ ETF CFD? Especially curious about liquidity. Thanks and good luck with allergies. I appreciate that. I mean, yes, of course, the higher the liquidity of the asset will always contribute to your capacity. However, it's not the only thing. So again, I wouldn't worry about too much. Like, don't change what you do as a trader to satisfy a specific variable like capacity, unless it's, a limiting factor. Like if you say, oh, my capacity is 200K, and we go, well, that's probably a problem because you can fill that up relatively quickly with investor capital, when the time comes. Then of course that's a different conversation. But if your capacity is like 10 mil, 50 mil, 100 mil, I'd be like, I wouldn't be too concerned about trying to change the asset that you're trading, or trying to change from trading the actual index to an ETF of. But yeah, of course, the capacity takes into the way that we figure that out, or the way that we measure the capacity, is we take a look at the toxicity flow of your orders, okay, which of course takes into you need to get them compliance to validate that IBIT ETF can't possibly be a liquidity or counterparty. I mean, I will. I am compliance. Just join the live. Oh, sorry. I thought that was the same person. Yeah, so I mean, with capacity is such a difficult one, right? Because there's so many factors that go into it. And I always talk about this when I do these sessions. And you could be trading a highly liquid asset, low volatility asset like euro dollar, and therefore you would think, oh, well, my capacity is going to be high. But if you're scalping it with a 1 pip stop, if an investor's trying to tag along with that trade essentially, and they've got 10 mil, they're probably going to be getting slipped, and they're not going to be getting the same results as you. So it goes deeper than just the asset that you're trading. It goes down to things about the strategy, about the execution. There's so many factors in that determine the capacity factor. But if it's a specific problem for you, send me a Darwin. I'll take a look at it. And we can try and run some tests on the back end to see if it would benefit you from switching one to another. JC, adaptation is one component of longevity. I just want to say, actually, you guys have been great recently at actually coming into these sessions and having conversation with me. I know I make a joke of it, the fact that I don't like being a man who's just sat here talking to a camera, but truly, for a long period of time, I was coming on and doing these sessions, and I would get people talking in the Discord and they would be sending me their Darwins and we would have relatively tight discussions. But since I've moved to YouTube and started doing more in-depth sessions, I've realized that people are really getting involved, which makes my life a lot easier and a lot more satisfying. So thank you. Thank you to all of you who come in and either leave comments or, have a chat with me whilst I'm on stream. Jason said, adaptation is one component of longevity. So good job identifying that and taking steps to correct. Yeah, of course. And you kind of have to be real with yourself, especially as a trader, right? You have to ask yourself tough questions. You have to make difficult decisions. And if you kind of skirt around them, you're just delaying the inevitable, which is not necessarily worst case scenario blowing up, but it's just poor performance or doing dumb stuff. Yeah, PX Lou, when trading futures, are we actually trading real contracts? Because I'm seeing differences between TradingView and the MetaTrader chart, even though it should all be the same. So it depends. If you're trading through interactive brokers, then yes. However, if you're trading futures through Darwinex Zero, it then gets converted to a CFD chart. However, we do take real futures, like you are trading the real futures chart. I would say if you're seeing a discrepancy between TradingView and MetaTrader, check you're in the right. Check that the date of contract or the date of expiry of both contracts are the same. That's usually what it is. Even if you're experienced with futures, I've had it before where somebody will be saying this and then they'll check the chart and they'll realize that they're in the wrong contract expiry. But yeah, to go back to my point, the investors go through obviously the Darwinex asset management license, right, which is to deal with CFDs. So what we do is we would replicate your trades on the CFD brokerage for the investors who come into your strategy. Andy Bear, I just joined the live stream, wanted to ask after the collaboration phase, is it guaranteed to receive 30K virtual fund with a 15% performance fee? It's absolutely not guaranteed. It's all based on your performance. So it's based on your risk adjusted metrics. Again, I did show this earlier, but I presume you wasn't in the session. This is one of my accounts, started at the end of April. I passed calibration or come out of calibration phase at the end of May. And I had my first allocation of 40,000 at the beginning of June. So I got my allocation in the following month, which was a week after I passed calibration. However, that was coming off a 10% month. So it's all dependent on your performance. Okay. It looks at, I will give you a rating based on your current month's return, your previous 5 months return, and your previous 6 months drawdown. Now, of course, if you're coming out of calibration, it's highly unlikely that you've got 6 months worth of performance. So you are kind of at a disadvantage there because you don't have previous 5 months return to account for. But also your drawdown generally should be quite low. So it's kind of swings and roundabouts with that. But yeah, it's not guaranteed, but it's doable. Risk 1%. How are we doing, dude? My VAR is at 24.81%. Would my capacity be low because of this? It won't affect your capacity because your capacity is based on the risk-adjusted metrics anyway. So it won't matter. Even if you bring your VAR down, your capacity will likely stay the same because, again, with the VAR to the risk multiplier relationship, it's kind of auto balances out at the end of the day anyway. So your Darwin will always come to the same result. Snacks, how we doing? Hey, mate, can you explain what happens when you use low martingale? I see my rating is negative, but my account is in profit. Is that because the small martingale I use? Yeah, so this is a really interesting one, right? And I actually feel like it's a great question, by the way, but I actually feel like I figured out a way to counteract this to a degree. So this account uses martingale only on one strategy. So as I mentioned, I have a strategy running on multiple assets with high swaps where I do like some form of carry trading at a very low level. There's not much exposure to that, but I have that. I have my normal trading strategies as well that I use on XAQP. And then I also have a grid system, which uses martingale position sizing, which for anybody who is unaware, martingaling is where if you would enter a position based on whatever parameters the strategy has. And then as it goes into drawdown, you would add more size and the size would generally get bigger with your target moving down with price. So for example, let's pull, this is the signal account for BYXB. So we can see Euro Swissy here. It first started trading up here. It got long. Then it moved lower, got long again. Then it moved lower and it got long again. And it will likely get long again at the close of this 4-hour candle. Now you can see the size is starting to get larger. So we started with 0.03 lots, then 0.04, then it will probably be 0.06 or something similar, maybe even slightly higher. But the TP is moving down with every order. Essentially, what you're looking for with a martingale system is small wins, but a really, really high win rate. Usually they blow up, and you have to be careful of that. I run that martingale at a really, really low risk, but how I counteract it with the risk engine. In fact, before I get into that, yes, it will work against you, because essentially what the risk engine will do is it monitors your behavior to ensure that your risk stability is consistent. So what essentially it's doing is saying this trader uses the same amount of risk exposure every time to generate a return, or at least within a specific boundary. With a martingale, it's really difficult to assess the amount of exposure that trader is going to take in the future, because on one trade, they might take a one lot. They might take a one lot, another one lot. Then on the fourth trade, if they go into drawdown, they might end up with 10 lots on the market. Now you have to measure their exposure at the highest count, right? Because that's the most reflective of how much exposure the trader is willing to take, and therefore it's probably going to give you a high value at risk, because if things go bad, they spiral. Things go really bad. And the risk engine and martingale are kind of working against each other in that sense. When the trader goes into drawdown, the risk engine is thinking, how can I minimize my exposure here so that we, save the investor from blowing up? Whereas the martingale is going, hell with that. We need to add more size, because when we add more size, it's more likely we'll work out of this drawdown. So they're counteracting each other because they're doing two different things. So what the risk engine will do is, if the exposure from the martingale gets too high from a deleverage perspective, which it will, because if it keeps adding size, your deleverage on that position will increase over time. As soon as it breaches a certain threshold, the risk engine will close a certain percentage of that position. So let's say it closes 50% of the position. By the time the position hits the target, okay, where your signal account will have made it out of drawdown and will have been positive on that trade, the Darwin might not be positive because it closed 50% at a loss. Does that make sense? I hope it does. If that doesn't make sense, please let me know. But I think I've figured out a way to kind of game that right. And this is why I said earlier that this BYXB is kind of my testing account, because I'm trying to test that. Now, again, I've only got 3 months worth of record, so it's difficult to take anything away from this right now to say, yes, it works long term, or no, it doesn't, because I just don't have enough data on it. But what I do, like I say, I mentioned I run a grid system on this. As you can see here, I was up 3.5%, and then it kind of went on one trade, worked back. But actually what I've managed to do is get my Darwin to replicate it without the risk engine closing some position size whilst I'm in drawdown. And the way I do that is I hedge the grid system with breakout strategies. Now I've changed that slightly. I don't hedge it specifically with breakouts. I hedge it with XAQP. So all of the trades from XAQP come into BYXB as well, and they run at much higher risk. Okay, so the risk engine looks at my exposure from XAQP's level. So it goes, this trader generally takes X amount of dollar risk per position, or value at risk, or deleverage, whichever metric it's looking at. Then when I'm gridding, I'm so far under that barrier that even if I go into drawdown and keep adding size, I still don't reach the threshold of the deleverage that my breakout and mean reversion strategies do. So generally, it allows my grid system to just keep playing out and playing out and playing out. There's only been once, I think, where it's actually closed some of my exposure. So if you are running a martingale, I would say if you're running a martingale on its own, don't. I don't think that's ever a good idea. But if you can figure out a way to hedge it with another strategy that doesn't martingale, even if that strategy is designed to break even, right? It's designed not to make any money, and you let your grid or your martingale system do the heavy lifting from that perspective, at least it stops the risk engine from intervening too early. Having said all this, I don't condone grid or martingale trading. I think it's, I don't think it's the best way for somebody to build their career moving forward. Like I say, I do it. BYXB isn't my main portfolio. This isn't one that I'm bothered about. It doesn't have any AUM. I don't really care if it doesn't get any AUM, because my focus is on XAQP. However, if you are grid and martingale, try it out. Never do it with your own money though. unless you've got a proven record of being able to do it, because yeah, it's a dangerous way to trade. Snacks, I hope that answers your question. Anyway, fulfillment, thank you tons. I will keep in mind and get in touch with you whenever it becomes an issue. Just needed the info for now. Okay, perfect. If your capacity is in the tens of mils, I wouldn't really worry about it. That's a few years down the line kind of worry. Elevant said, hey mate, just started a calibration phase today. How we doing? Hope you're good. Are the required 15 trading days counted as days that new trades are opened? I open trades only on Mondays and hold till end of week, so I hope not. No, new trading days classed as any day that you have a position open. So holding from Monday to Friday would be 5 trading days. The only thing that you might struggle with is the risk calibration factor, which takes a look at your trading decisions. So essentially when you open and close a trade. However, if the risk engine judges that you're swing trading, which sounds like you are, it will be a little bit more lenient on that. So it shouldn't take you too long, but it may take you slightly longer than 3 weeks like it would for a day trader. My strategy increases risk per trade slightly every week. If last week was net loss, I do this only in a strict and controlled way and capped after a few weeks. Would that not work with the risk engine? Okay, so you're effectively martingaling your strategy as instead of martingaling a loss, right? So if you're or you're betting on the comeback, I guess, as long as you're not, I mean, you said you're increasing the risk slightly, as long as you're not like quadrupling the risk, week in, week out, you shouldn't see too much of a swing between like within your value at risk. Again, I wouldn't be too concerned about it. If you're going from risking 1%, let's say, to then next week risking 1.2, 1.3, 1.5, I wouldn't be too concerned. But if you're going from risking 1% to 5%, then yeah, you're probably going to see some issues with the risk engine. Jay said, while we are on the topic of copying one of your Darwin's trades to another, I sent you a DM on Discord on a similar topic. Please check at your own convenience, mate. Just need some clarity. I apologize for missing that, dude. Trying to find it. He might be in my DM requests. Ah, yeah, there you are. Just reading your question now because I'll answer it here without giving away anything that's kind of private. Okay, so you basically asked if you have 2 accounts and there's an interlap between your current system. So are you copy trading exactly, or are you doing what I'm doing where you're copy trading the trades and then doing things outside of that system as well? Or is it 100% that the trades from one Darwin to another Darwin? Because the issue with that is you won't be eligible for DarwinIA allocations. So only the highest performer out of those 2 Darwins will be eligible for DarwinIA allocations. Permanent allocations, boosters, and investor capital, that's all fine. You'll likely find you wouldn't be included in the index because if one of your Darwins gets included in the index, it's going to have too high a correlation, and we wouldn't put the other one in the index as well. I would personally say if it's exactly the same trades, stick with 1 account. There's no point paying 2 subscription fees. However, if you're trading the same trades and others, you probably will escape correlation anyway. So, for example, I mean, it's probably a bad example because my August return is fairly similar, 3.97% on XAQP, 3.62 on BYXB, 1% last month, 2% on XAQP, and then a negative return. So they are correlated, I guess, to a degree, but nothing worth worrying about. If we take a look at this, so correlation, I don't even think BYXB is on here. I just realized how zoomed out I am. You guys probably can't even see that, right? Yeah, so BYXB isn't even on here, right? And it's taking all of the same trades. Now, of course, I didn't start copy trading at 100% from the beginning, so it's unlikely that they would be anyway. But yeah, I wouldn't be I wouldn't copy trade one Darwin to another directly if they're taking the same positions. I'd just stick to one. But if, like I say, you're adding additional trades in or even taking trades out, then yeah, you should be fine. Not exact trades, but it's all same type of system. So there will be a correlation between the two. Think of it as one, scalings and verse one. Yeah, you shouldn't have an issue then. You shouldn't have an issue. I wouldn't worry too much about it. Elevant said, yeah, it's, by the way, guys, I apologize that we haven't got into the strategy stuff, but I think this is a great session for me to be able to get into topics with you guys anyway. What I love about this session is it's just relaxed and there's no sort of agenda. I don't have a presentation, so I'm happy to go into certain things if you want, but I'm also happy to sit here for the hour and just chat and answer questions to you guys. So it's only a tiny increase of risk per week. As from years of data, I found that to be significantly more profitable. I wouldn't worry, dude. Honestly, I wouldn't be concerned. Like I say, I've got 16 strategies running on XAQP at the moment. They all risk different amounts, and it doesn't harm me. If we take a look at my value at risk, because it's taken an average, you see it's fairly stable. It doesn't move too much, and that's with 16 strategies running at different risk levels. All around the same risk levels, but they're all different. So, you know, I might have one strategy that risks $50. I might have another strategy that risks 100. Doesn't sound a lot, but it's 100% increase in risk on that trade from a dollar perspective. So it's still quite a big difference at that granular level, but it doesn't affect me too much. And I think you'll find you won't be affected by that either. FX Physics, what's the upside of moving to Classic from D0 as far as capital allocation? So great question. And as far as capital allocation, there is no benefit. Okay, so the reason we put that option there is because the infrastructure is the same, right? The whole process is the same. The only difference really is the way you're paying for the service. So of course with Zero, you're paying for a virtual account. It's a monthly subscription. Whereas with Classic, of course, you're paying broker commissions. So there is no monthly subscription. That's why we give people the option. Do you want to trade with a live account where you put your own money at risk? For some traders like yourself, FX Physics, who've got a lot of experience, maybe that's something that you would want to explore eventually because you can trust yourself trading your own money. For traders who are more like up and coming, maybe that's not the right path for them and they want to, you know, trade a virtual account or a simulated account and try and raise AUM that way. But from a capital allocation perspective, there is literally no difference. No one gets benefited. And actually, I would say, I don't know if there's a markup. I'll have to check that actually. I don't think there's a markup. We actually try and reduce commissions as much as possible to give investors the best conditions. So we subsidize a lot of conditions. We subsidize a lot of commissions with our performance fees from the 100 million that we manage under the asset management fund. So we try never to mark up commissions. But in terms of that's on the CFD side, right? So in terms of interactive brokers, I don't know off the top of my head. I'll be completely honest. What was I going to say as well? I was going to say something. Oh yeah, I was going to say what I've been noticing recently, and I think it's due to the talent that's been coming through Zero. There's some Darwins on Zero that are scaling much faster than what I'm seeing over on the Classic side of things. I mean, when you look at the amount of traders that we have on Classic versus Zero anyway, just the amount of traders that are coming through Zero far outweighs how many traders we have on Classic anyway, right? So of course, you're probably going to find more better traders that way anyway. It's like the more you fish, the more fish you're going to catch, right? And with those great traders, what we've seen, I mean, Wissy, for example, this is our most capitalized trader at Zero. Now, remember, Zero's only been around for like 2.5 years. And this is our top guy on Zero. So he's managing 2.1 million euros at the moment. 1.25 million of that is from actual investor capital. He's got 104 investors. And then 1.065 million is from us with our DarwinIA seed capital. But the rate of growth that we're seeing for Darwin's on Zero far exceeds the rate of growth that we're seeing on Classic. take a look. There's a couple more examples. We have TVTA, which is Colin, who actually might be a great person, physics, to talk to about ATA. This dude's solid. Did an interview with him. Really nice guy, and just a solid trader. Again, the speed of which he scaled was unreal. What a great story about this was, I recorded the interview on this date on May the 7th or something, when Colin had his first investor. So I got to tell him live on the interview that he had received his first investor within a couple of weeks. Like, he was at 40 at the start of June, and then quickly scaled to $500,000. He's currently sat about 387,000. I think his name on X is Trader Colin, but I can put you in touch if needs be. He's a great dude. We've got another one. Who's the other one? TXRT. I also had a call with this guy a couple of weeks ago. Super humble dude. Currently sat at 866,000. So what we're starting to see now is that Darwin's from zero are getting the same respect that they are at Classic, which, you know, like I say, we've only been around for 2.5 years at zero, so it's taken time naturally, right? But I think investors are getting past that, and especially us with the index, with our hedge fund now, where we're allocating millions of dollars worth of capital also, and through our prop fund, where we're also allocating millions of dollars worth of our own capital. What we're noticing is actually there's no disparity between the quality of trader just because they're trading a live account then trading through Darwinex Zero. I like to think it's because the track record is more valuable than whichever account that they're trading, right? So, and what I mean by that is, to somebody like TXRT, right, who has a 1.5 years worth of track record, which has obtained him almost $1 million in DarwinIA and almost $1 million in investor capital, he would value this record far, far more than a trader who put $1,000 into a Darwinex live account but's lost every month for the past 6 months. They would be happier to pull their funds than this guy would be to end his subscription, right? So actually what you can do is look at those two traders, and instead of the key defining factor being, oh, well, I'm going to invest in that guy because he's trading with his own real capital, you go, well, the value that this guy has with us, like, it's his career, and he's going to be way more protective over that and perform and, you know, be more serious about the game than some guy who just keeps doing his ass with $1,000 live account, right? And like I say, we're starting to see these really sharp curves of investor capital come into these Darwins, which is just great to see. And the reason it's great to see is because we're giving traders the opportunity to not take any risk apart from their monthly downside of 38 euros or 50 euros if they want monthly payouts. You know that's your maximum downside. You're not going to lose any of your money. You're not going to have to put capital at risk. You're not going to go out and network with investors. Like, going back to what Jason said at the start, like, trading is a lonely space, and a lot of traders are introverted anyway and don't necessarily have the sales skills or the network to go out and build relationships with investors. And we're trying to solve all of those issues, right? Come and trade a simulated account. It's simulated. It's not necessarily demo, okay? Because we implement the same commissions, the same swaps, the same spreads as you would get on the live account. So there's no kind of fugazi. You build your record, you get access to all of this with zero risk. So anyway, I feel like I'm rambling. I mean, we've used 45 minutes of the session to just speak, ask questions and stuff. So I don't think we have the time to go into strategy development stuff specifically, unless anybody has a specific question about that. So if you have a specific question about what any of the strategy development side of things, like, let me know. My doorbell's going. I've just realized my family are locked out. So bear with me 2 minutes. I'm going to go throw some keys out the window. I'm back. Okay, let's take a look. Jay said, is there any plans in the future to be able to see the investable attributes tab from Classic on Zero as well? I don't know. I think it's a good idea, but I don't know if that would get accepted into kind of the development workflow because it's already available, right? So what JC's talking about, if you haven't been to one of these sessions before, just log me out. Oh, come on. XAQP. So what JC's talking about is these, which are investable attributes that track different variables on your trading strategy. Now, these are really useful when kind of going granular with your strategy analysis. But most people are unaware that you can view your zero Darwin on Darwinex exchange, or what is kind of widely acceptedly known as Darwinex Classic. You would have to log into your account. So you would either need to set up an account with Darwinex Classic or just log into your Darwinex Zero account with your username and password, and then search for darwinex.com/Darwin/ your your 4-letter ticker, and then put a hashtag at the end. I don't know why the hashtag works, but it just does. It will then bring up your Darwin. You can see it says by zero here. And you get a lot of the same metrics, right? So we get risk stability, which is your value at risk chart. We get loss aversion, which is your maximum favorable and adverse excursions, which again, we get on zero. So there's a lot of overlap, okay? But there's some of them, like capacity, that you only have access to on Darwinex. Now, to answer JC's question, I'm not sure that they would then rebuild this on zero just because it's there on Classic. However, that's something that, I mean, in a perfect world, right? This is probably not going to happen due to regulatory reasons. But I would love to just have Darwinex as Darwinex. I would love to kind of close the gap between zero and Classic and just have one interface, one login, one platform. Whether that happens or not, who knows? That's what I would like, but it would solve issues like this. But yeah, going back to what we were talking about earlier about the capacity. So we measure the toxicity flow of your orders, and then what we do is we would measure how much AUM would be able to be managed by that strategy using the toxicity flow that we've measured. So for example, if you're trading with $100,000 on the virtual account, how much capital would basically break that system and start getting slipped from an investor perspective? So you can see on mine, I mean, mine's actually pretty bad at the minute, but I think it's because I used to have more systems that had really tight stops. So I'm hoping to change that over time, which I've already started implementing. But you can see that my Darwin on the last calculation for this, which was on Monday this week, my Darwin was up 16.85%. If an investor was getting slipped by 2 pips on every trade, which is nothing, right? They'd only be up 1.3%. So that's like a 15% differential between what would be my results and what would be an investor's results based on 2 pip slippage, which is just not okay, right? So of course, because it's our asset management license that is effectively managing the capital, it's our license and our regulation at stake, or our name at stake, let's say. So we can't advertise your Darwin at doing 16.85%. But then, knowing an investor's getting 1.3% return because they're getting slipped. Hence why we cap your strategy at your alpha cap. But if you scroll down, you can see the metric is here. So max estimated investment, which for me is currently sat at 7.4 million on XAQP, which is lower than I would like it to be. I would like that to be in the tens of millions. However, getting to 7.4 million is probably a couple of years away, and it's a good problem to have, right? That's something that I'm not going to worry about right now, but I'll worry about in the future. But it's very much based on like commonsensical things, and there's no one fix that will solve this issue for everybody, right? So when I say commonsensical, I mean trade more liquid assets. Okay, so if you're trading the FTSE in the UK, of course, it's a thinner market than something like Euro dollar or the S&P, right? So trade highly liquid markets, hold trades for longer, have wider stops, yada, 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 like basic common sense things. Like if you're scalping in a liquid market with like a 2 point or a 2 pip spread, stop loss, of course, it's going to be really difficult to scale that strategy. Not sure why mine's so low, but I mean, hey ho, I guess we'll see in time if I can try and bring that up. I'd like to get it above 10 million. 20 million would be phenomenal, but I'd like to get it to 10 at least. Physics, yeah, I will speak to him. I'll speak to him and I'll let you know. Snack said, I only use martingale on one strategy, include trading 2 pairs. I also have another strategy without martingale. I will de-risk the martingale strategy then and will increase the risk for the non-martingale. Yeah, try that. That's exactly what I do on BYXB. And at least it works to a degree for satisfying the risk engine to a degree. Of course, if your martingale gets too deep in drawdown, then the risk engine will likely get involved and start closing a certain amount of that position. But yeah, you should be okay if you do that. First 2 positions are the same, then 1.5x, then 3, then 4. Most trades close out with 5 to 6 trades. 7.28 was a big ass Trump move because of the trade deal, which 7.5% stop loss. Okay, yeah. So that's the thing, right? Is that like you might be okay for a period of time, and then one trade can wipe out the whole account, which is just super, super frustrating. In fact, Waka Waka did that. I'll bring that up in a minute. When was that? The 28th of 7th. Yeah, so here. Yeah, it's not too bad. But yeah, I think you'll probably benefit from let's take a look at your VAR. You'll probably benefit from kind of having the 2 systems running separately. 13%. It's not too high. So that was the trade. Yeah. Yeah, it's a bit of a beefy move there. Waka my FX book. So this was an account I actually used years ago. Most of you have probably heard about it. It's kind of a famous EA, if you will. It's awful. Nobody should ever use it. I did. Got burnt, is what it is. I actually closed out the loss at 30%, which is okay, but it did recover in the end. This was actually higher. It was above 70% drawdown. But from inception, which was in 2018, all the way to March 2024, the max drawdown it had been to was like 12%, right? So you sat there with a 5-year track record going, well, the max drawdown's 12%, you know, yippee-ki-yay. And then in literally, I think it was like 2 weeks, it drew down. It drew down for, I'm sure it was over 70% for me. Snack says whacker over 55% drawdown. Yeah, I mean, it all depends on the risk, the risk settings that you had for it. But I'm sure this track record used to say 70%. However, I don't trust ICE as a broker, ICE FX. I don't trust that. I was actually thinking the other day, I'd had a couple of conversations with some people, and it got me thinking, why? So you can only attribute a broker account to one MyFX book, right? So XAQP is already on MyFX book, which means you can't then, even if you have my login details, you won't be able to go and set up another MyFX book for that. But I noticed there's accounts that people have, like for example, people have this exact Waka Waka record on MyFX book outside of Valerie's or Valeria, whatever her name is, outside of her record. And it's like, were you trading it from the start, or did you just give the broker a broker statement and they imported the record and said, yeah, trading privileges? Like, I've started to get really skeptical over this sort of stuff recently, especially when a broker's not regulated or heavily regulated. It doesn't have to be by the FCA, but it needs to be by somebody who is a heavy hitter like the FCA, you know, like the SEC or ASICs or whoever it may be. Because there's some dodgy stuff going on. ICE, not a fan. I think ICE are completely unregulated. I think they're out of Russia, if I'm not mistaken. Yeah, I'm sure there's no I'm sure there's no regulation. I was literally looking at them like 2 weeks ago. Yeah, very limited stuff. Okay. There's no disclaimers or risk disclaimers or anything. Yeah, I won't be putting my money there, but hey ho, it is what it is. But anyway, back to my point. Yeah, Waka Waka, it was fine for 5 years, and then it drew down like 70% or so, which is just sends shivers down my spine. Back to the questions. Elevan, is the capacity based on lot sizes, stop loss size, duration of trade, or something else? Yeah, kind of a basket of all that, right? So like the liquidity, the volatility, the asset that you're trading, the size of your stop. Now, it's not the physical stop loss size that you input into MetaTrader, but it's like how far do your trades breathe against you? Like, do you let them breathe, or do you just shut it straight away? Like, if you've got a 2-pip stop, it's going to cut it instantly. That's really hard to scale. It's really hard to get real like millions into the market if you're just clipping it in one go and kind of cutting it again straight away, because there is going to be slippage. There is going to be a bit. For example, if you're trading with a 5-pip stop and your investor slipped by 2 pips, with the size that you're trading, that 2 pips is like what, 30% slippage. So you're adding 30% of a loss on top of the additional loss. Whereas if you got a 50%, if you got a 50-pip stop loss and the investor, gets slipped 5 pips, they're only slipped by 10%, which means it's an additional 10% loss. So the bigger the stop, the more breathing room, the better for the investor. But again, it's just like commonsensical stuff, like highly liquid assets. Let your trades breathe a little bit. Like, don't be too tight with your stops. Hold them for longer periods of time. You can pyramid into trades so that it's not like you're fully executing the whole amount in one go. But also, on us, this is why we aggregate from separate liquidity providers so that we can increase our pool of capital. Because, of course, we might say your max capital is 40 million, but then you might be able to trade with another broker that uses a completely different liquidity provider that kind of is untouched by your orders, right? Unless there's some weird aggregation going on behind the scenes between broker or LPA and LPB. JC, that's fair. I just prefer the look of D0 as a platform. So I was just wondering. Yeah, I mean, I completely agree with that. I actually prefer the layout of Classic, but I prefer the look of Zero. But I kind of use them for different things. I mean, let me have a chat with them, because what I really want them to do, and it was accepted into kind of the development pipeline a long time ago. But we've just been super busy with stuff for the CNMV, which is the Spanish regulator, for the past few months. It's been difficult to like really push development as hard as we can. But I've asked if we can build a trading journal. So we would have like another section here to go into your journal, and you would be able to log each trade, right? So for example, you don't have to go to your spreadsheet or your Notion or your TradeZella or your Edgewonk or anywhere like that to then go and journal your trades. It's all within your Darwinex account. You have your risk adjusted metrics, you have your trading journal, and it's all there. We already collect that data, right? Because we're a broker. So we already know your trades. We already know when you opened it, when you closed it, your profit, etc. So it just makes sense to have that journal. So if we include that, maybe it makes sense to like add the attributes here. That's actually a good idea, right? It's actually quite a good idea. So leave it with me. I'll see if I can get an update on the journal, and I'll see if we can get them, because again, the infrastructure is already there, right? Like, they're already built because they're right here. I would presume it's just a case of getting that code and being able to put it on the front end here, because it will pull from the same back end, right? So yeah, interesting. Or maybe even down the side somewhere. Like me personally, like all of this, it annoys me. I actually started logging out. I mean, I've only got 4 days left, so I'm not bothered about monthly payouts. I don't want them. So that all will go. But like, there's so much going on here, right? Like, so much going on. We could simplify it, put the attributes like here somewhere, maybe get rid of this. Like, we don't need that. But anyway, I'm kind of getting off track here. Snacks. I mean, being on drawdown means the margin is used. Not always bad, but was a hell of a ride emotionally. Yeah. When you're in a martingale drawdown, it's horrible, because you don't like the downside is like unlimited, right? Well, it's not unlimited, it's 100%. Like, well, depends. You could owe your broker money, but it really pulls on you emotionally, because you look at the chart and you're like, surely there's a pullback coming soon. Like, surely this chart has got to correct, and it just keeps grinding and grinding and grinding and grinding. So yeah, Jay said, I'm not a coder, but on face value, looks like it might be easy. Not sure though. I appreciate there's more important stuff to work on. Yeah, I mean, I'm not a coder either. Like, I can't classify myself as a coder. I'm good at web development. I'm good at building algorithms, but I always use softwares that make it easier. I'm a self-taught coder, but I'm nowhere near the caliber it would need to be to work in that field, or like be a full-time developer. But I know something like that. We've already got the back end for it because it works on Darwinex. So it would be a case of getting the same front end integration to show that data. Jay said, also just another issue I noticed. Sorry if it comes across as overly picky. Don't worry about being picky. You're at 2 a.m. in the morning now, right? It's you're allowed to be picky, but you can't search 4 character tickers on Classic and 3 character tickers on Zero. Yeah, I mean, I don't ever use a search. I can't always use this. So like, if I wanted to search a Classic Darwin, I just type in the Darwin like that. But again, I appreciate I am a lot more familiar. I know the Darwins that I'm looking for. I feel like that is something that we're looking to do anyway. I feel like that's in the pipeline in terms of having it more mingled. But like I say, if it was an ideal world and it was me 100% like doing everything, as long as there was no regulatory issues, I would try and cross-pollinate it as much as possible. Have one platform where both traders access the same. But again, I appreciate it's not as easy as just saying and doing that. There's so much to consider. Elevant said, I know the founders are Spanish, but surely there's a better jurisdictions to run Darwinex from rather than Spain. Yeah, so the issue with Spain is they ban CFD trading, right? So there's so many issues with operating out of Spain. However, for Spain, or for the longest time, Spain was fine. Like, the CNMV were fine. There was no restrictions. As long as you adhere to the CNMV's reporting and to their regulatory oversight. So, for example, the things that you say, the way you market your product, the way you actually process and do your accounts, all that sort of stuff that you provide to the regulators. As long as you're doing that, okay, there's no problem. But Spain have kind of done a 360 over the past couple of years and just gone, yeah, we're banning CFD trading, right? So as far as I'm aware, Spanish clients can't open a live account, but they can trade through Zero. But we can't market to them directly, so we can't run like paid media in Spain. Having said all that, we do also have like a secondary head office in London. The FCA are a far better regulator than the CNMV. They are still that the FCA are far stricter, but they also they allow you to run your business, right, without giving you ridiculous requests. So yeah, but I mean, we'll see. We'll see what happens in the future. In terms of running the business from Spain, there's no issue. In terms of like operating with Spanish clients, that's where it gets a little bit sticky. But like I say, we have a presence in Spain, presence in England. We also have a presence in the Seychelles, but we don't run anything from the broker side through the Seychelles. It's kind of there as like a license if we need it. But we're getting our SISEC license. We're in the process of securing that now. So we're in the final stages of that. So we can kind of like set up a third or a tertiary head office out of Cyprus as well. So that if we need to be malleable in Europe, we can, because we have the SISEC license too. Which I feel like a lot of people don't actually respect as much as they should. Like, getting regulatory licenses is not easy. So for the FCA, for example, you have to lock up over $1 million just to get licensed to be a broker. You have to lock up $1 million just to be licensed as an asset manager. Like, there's a lot of things that you have to do to get those licenses. So funnily enough, I was seeing an argument on Twitter earlier, and it was just classic Twitter beef. And somebody posted their Darwinex record, and they were like, "Oh yeah, scams, fraudulent." I'm like, how can you be a fraudulent company when you're regulated by various jurisdictions? Like, it just doesn't. It's such a nonsensical statement to make. And of course, I took no offense from a Darwinex perspective, because I know it was just him saying it to another trader. But I'm just like, come on, man, like, put some respect on that. It's so difficult to do. You know, and like I say, we have to adhere to so much kind of reporting and rules and stuff. And actually, it's another great thing about Darwinex, if you're a trader, is that you don't have to worry about any of that, because we do it all for you anyway. And again, it makes me laugh when people say like, "Oh, zero is not worth it," or "Why would I trade with zero when I can trade with props?" or whatever it may be. And I'm like, if only you knew how much value you're actually getting for 38 euros a month. Like, you know, if only you understood it, or if only you knew. But I feel like if your first introduction to this industry is through online funding companies, you're probably always going to have that weird skewed view anyway. But enough about that. Snacks, you got a coupon code to buy a permanent allocation? I will do it right now. I don't know. Let me take a look. I think I might have one somewhere. Coupon. I don't think I do have one. No, I can't find one. Yeah, I know they don't usually give coupons for the permanent allocations. I can't find one. I'll have a little look afterwards, and I'll ping anything over if I can find one, but I'm pretty confident I won't be able to find one. So yeah, apologies for that, Snacks. Okay, well, this has been different. I mean, I love these sessions because I never know what we're gonna do. I mean, if you want to watch a specific session on strategy development, which is what this session is supposed to be, what we usually do. Failures effects was out, and but isn't working on permanent allocation, unfortunately. Yeah, I think the discount codes are purely for subscription basis. But like I say, send me a DM on Discord if you've got Discord. If not, send me an email at kieran.duff@darwinex.com, and I'll see what I can find. But like I say, I'm not sure I will be able to find anything, but I'll take a look for you for sure. But yeah, I love these sessions because they're so chilled compared to the other ones that I do, where it's a presentation and I'm, you know, talking and explaining the product and certain things. Yes, I am Kieran-Darwinex. I have a green tick, an orange tick. Make sure you're messaging me and not a spam account. But yeah, I mean, usually we spend these sessions going over strategy development and stuff. There we go. Got your, yeah, I've got your request. So just ping me a message on there and I'll take a look for you. But I'm also happy to kind of spend this hour just chatting. And I think we've gone over some really good stuff today. And I think I've answered some really good questions as well. And at the end of the day, this is entertainment as much as it's informational, you know. So I will do what you guys want me to do. I actually want to do a Darwinex TV where it's just like I go live like this and just like this all day, and then we sprinkle in some of the like educational or information topics, and keep it fresh for you guys, so it's not kind of routine. Oh, we have that session, then this session, then that session. But we'll see how things pan out in the future. FX Physics, thank you so much, man. Blessings to you and your family too. I appreciate you being here. You've been here since the beginning of this session, so appreciate that massively. I actually want to chat to you separately about ATA. I just wanted to ask, which you'll probably be able to answer now. The statistics on the leaderboard or on the website, how often do those get updated? Are they updated manually? For example, I think the highest that XAQP was ranked was 13th out of 8,000. I don't know if you're doing it on the closed rank at the end of each month, or whether it's just the highest spot you've ever achieved. But the highest spot I achieved was 12th or 13th this month, which is kind of like the top 99%. So will you update that at the end of this month? Like, or is it kind of like you'll just update it as we give you an update? Same with the return and all that sort of stuff and the metrics that go with it. Yeah. I'll be there if Darwinex TV launches. Awesome, dude. I appreciate that. It's only me. It's Manuel. I'm planning every month at month end. Okay. That's cool. Yeah, that's cool. Yeah, if not, I mean, I'm sure you can build some form of AI software. Take a look at Replit. You might be able to build an app which does it automatically for you, where it can scrape the data, or at least you can go through and you input the figures yourself, and it might make it easier for you. But Replit's just a fantastic piece of software anyway. I use it for many different things. So take a look at that. You might be able to build something really cool, and it'll look stunning too. But yeah, guys, I appreciate you all turning up anyway. I appreciate you all asking questions. And oh, here we go. A few questions come through. None is good for automation. Yeah. PXXLU, I checked again, and yes, I do have the correct contract I'm looking at. Small differences, but they're differences. On the website, it says we're paying €5 for futures data. So why is it converted to CFD and then to futures? So it's not the chart isn't converted to CFD. It's the AUM would be converted to, because the AUM goes through our brokerage and through our asset management license. So if I invest to you as a trader, we don't have jurisdiction to go and invest that into a futures market on behalf of the client. So it goes through the CFD version of, but you're paying for the futures data, which is why there shouldn't be any difference. If you have Discord, send me a message on Discord. Again, if not, send me an email. I've just sent my email into the chat. Send me an email on there. Send me pictures or screenshots of the charts. Show me as much as you can, and I'll do some digging. If I can't figure it out, I'll send it to the ops team. But we've had this a lot before, and there's always been a reason for it. So, yeah, let's get the answer for you. The software is Replit. I've also put that in the group for you. FX Physics. So I'd definitely take a look at that, because like I say, you might find an easy way to do it, where you can just go on monthly, and it will, whether you input the figures manually, whether you get an AI agent to do it, or get it to scrape data from a website. You can also make like logins for people. If you want people to log in, you can put like upgrade subscriptions, all that sort of stuff. I'm not sure what your plans with it are in the future, but the opportunity is there to build something anyway. Replit is super cool. Like, I always recommend to everybody to go and check it out. But anyway, guys, PXXLU, send me an email or send me a Discord message, depending on what's easier for you. We'll find out the issue with the charts, but we do pull the correct data. Like, you are shown with the chart direct from the futures exchange, so there shouldn't be an issue, but we'll figure it out anyway. But anyway, guys, I hope you have a fantastic rest of your afternoon, evening, or morning, wherever you are in the world. JCid, get some sleep, get ready for the day tomorrow. We'll be back at 4 p.m. UK time tomorrow to do a Darwin explanation session, which is the more complex session of the week, where we go into the intricate details of the risk engine, value at risk, how an investor would see their return compared to you as the trader on MetaTrader, and all of that good stuff. DM me on Discord, no hire or anything, even if it's different. Now, it shouldn't be different. There'll be a simple explanation for it, I'm sure. And if there is something that's going on, we'll get it fixed, no problem. But yeah, awesome, guys. Have a fantastic rest of your day. I will catch you all in the next session. Peace out.